This is Bite Size Business, the channel where we take company news and reports and simplify it down into a few important metrics and ratios that we use to determine a company's financial health. In this installment, we will be taking a bite into Yum Brands. The starters. Yum Brands was founded in 1977 during the Cola Wars when Pepsi decided to enter the fast food market. In 1977, Pepsi acquired Pizza Hut. In 1978, they bought Taco Bell, and in 1986 they purchased KFC. Yum Brands was then known as Tricon and was spun off by Pepsi in 1997. In 2002, Yorkshire, the parent company to A&W and Long John Silver's, announced it would merge with Tricon to form Yum Brands. The deal would later go sour, and in 2011, both A&W and Long John Silver's were sold, but the name Yum Brands stuck. Later in 2016, Yum China was spun off as its own separate entity. The company is now headquartered in Louisville, Kentucky. The company currently has around 1,500 franchisees. They operate more than 59,000 restaurants and operate in 155 countries and territories. The main course. In the last 12 months, Yum Brands did $7.2 billion of revenue, which is up from $6.8 billion in 2022. This resulted in an EBITDA of $2.5 billion, which is up from $2.3 billion from 2 years prior. They also posted a net income of $1.5 billion, which is up from $1.3 billion in 2022, but down from almost $1.6 billion in 2023. Moving over to the balance sheet, the most recent report showed $6.5 billion of assets. This is up from $5.85 billion in 2022. They posted total liabilities of $14.1 billion, which is down from $14.7 billion in 2022. This left the company with a shareholder equity of negative $7.7 billion. This compares to negative $8.9 billion in 2022. The company also holds on to $11.2 billion of debt, which is down sharply from its 2022 numbers of $12.7 billion. Taking a look at the cash flow statement, we can see in the last 12 months that the company did $1.36 billion in free cash flow, which is up from their 2022 numbers of $1.15 billion and up slightly from their 2023 numbers of $1.3 billion. We can also look at the buybacks on this and see in 2022 they did $1.2 billion, and then in 2023 they slowed to $50 million. In the last 12 months they have done $327 million. Their 2022 and 2021 buybacks totaled to almost $2.8 billion. If we take a look at the shares outstanding graph for Yum Brands, we see they follow a similar trend to the other fast food businesses we've covered. In 2009, the company started with 483 million shares, and now, in 2024, they have 285 million shares. We can see it in the chart below on the year-over-year quarterly growth that shares decreased a lot in the 2010s, but that number has slowed significantly in the 2020s. If we focus specifically on the number since the end of 2021, we can see that they have gone from 302 million shares down to 285 million shares, meaning that they have bought back 17 million shares of stock. The dessert, the last step in our installment of Yum Brands, we will review all the stuff we had already talked about. So the company we review today is Yum Brands. They trade under the ticker symbol YUM. They're in the fast food industry. They did $7.2 billion of revenue, $2.5 billion of EBITDA, $1.5 billion of net income. They hold total debt of $11.2 billion, assets of $6.5 billion, and liabilities of $14.1 billion. This leaves us with a shareholder equity of negative $7.67 billion. In the last 12 months, they have done $1.367 billion of free cash flow and $327 million of stock buybacks. If we look at some of the ratios, we see a negative debt to equity of negative 1.46. We see a debt to EBITDA of 4.49, an EBITDA margin of 35%, a net profit margin of 21%. Their buybacks are 24% of their free cash flow and 21% of their net income. Their debt to equity is most similarly comparable to McDonald's as it is negative, meaning that they have more liabilities than they do assets. The debt to equity isn't too much of an issue. It is higher than the range that we like to look at, but it is relatively low compared to some of the other companies in this industry we've looked at. Their EBITDA margin was slightly higher than Wendy's and Restaurant Brands International, but still lower than McDonald's. And the same can be said about their net profit margin. They have done less buybacks as a percentage of free cash flow and a percentage of net income of the others. If we take a look at the comparisons, we see a negative debt to equity, just like McDonald's, a high debt to EBITDA, just like the other three companies we've reviewed in the sector. We see a high EBITDA margin, again another trend in the sector, and a high net profit margin, which is shared by Restaurant Brands International and McDonald's, and only not shared by Wendy's. Based on some of these numbers, they are following the industry and getting a yellow light when it comes to their financial health. I can't give them a green as they have negative debt to equity and they have really high debt to EBITDA. But the strong EBITDA margin and net profit margin make up for the fact that they have these, and so they don't get themselves a red light either. The check. This is some of the drawbacks that we see when we're evaluating a company. In this case, we are looking at Yum Brands, and the check is that they have recently done an acquisition, and when I say recently, they did it about a year ago now, to acquire over 200 KFC restaurants from EG Group. This is their largest franchisee in the UK and Ireland, and this is similar to the check that we saw for Restaurant Brands International. What this shows is that corporate does not trust some of their larger franchisees, or they don't think the franchisee is working in the best interest for the company to expand and to grow same-store sales. The reason that this can be seen as a good and bad thing is it shows that the company has an initiative to get some of their existing stores to do better. And this shows that they might be more willing to work with franchisees and franchise owners to improve existing stores. But it's also showing that they distrust some of their existing franchisees and are willing to buy back stores and use corporate level free cash flow to fix things that should be done on a franchisee or an operator level. Again, this is similar to what we saw with Restaurant Brands International, and it does appear to be something that is kind of popular within the space right now. I hope you enjoyed this installment of Bite Size Business, and I ask you to join me in the next video on Yum China. This is Yum's Chinese counterpart. It was the spin-off that we talked about that happened in 2016, and it will be interesting to compare specifically Yum and Yum China to see if they have any fundamental financial differences on the American and European side versus the Chinese side. They will likely be relatively similar, as they did split more recently, but it will still be interesting to see if in the 8 years since the split, if the companies have changed directions. Again, thank you for joining me in this installment of Bite Size Business. If you have any suggestions or any companies that you want me to do in the future, please let me know.